Much has been said about the future of Tesla, led by the visionary that is Elon Musk. So what is Musk's 2030 goal for Tesla, and how does this affect Tesla's stock price target? The majority of investors and analysts expect that Tesla will continue to boost vehicle deliveries, indicating that the business is well on its way to becoming one of the world's largest automobile manufacturers. With these projections in mind, what will Tesla's stock price be by 2030? What are analysts' takes on the stock price targets for 2030? Keep watching to find out. Musk has said that he wants the company to cement its position as the global leader in electric vehicles and that the company is seeking to sell more EVs than it currently does. Tesla is growing by opening new manufacturing facilities throughout the world and expects to open more. By 2030, the electric vehicle firm wants to sell roughly 20 million electric cars each year. This might be quite ambitious for some, but this is Tesla we're talking about, the brand that keeps exceeding statistical estimates. On this, Musk commented saying, "The tough part about estimating things halfway through an exponential is that if things are doubling every year or often simply expanding 50%, then shifting plus minus 1 year is a tremendous effect on the figure." Looking at the history of Tesla, this statement certainly applies. Before we dive into the future, let's look at the current state of things. The stock price of Tesla, the electric vehicle industry's poster child, has finally risen 45% in the past 2 weeks to about $1,056, signifying a return of the market warmth. Investors were happy to see a more familiar service return after seeing the price collapse to $700 in February. Much of the drop was caused by a shift in market sentiment away from high-tech equities in general. Given a variety of circumstances, it appears that the market has rediscovered its passion for high-tech equities and, in particular, electric vehicles. Despite a closure in its Shanghai facility, supply chain challenges, and increased material costs, Tesla had a wonderful year in 2021. As of December 30th, 2021, the TSLA stock price had climbed 49%, from roughly $700 per share in early January 2021 to $1,065 per share at the end of the year. Following the release of record third-quarter earnings figures in October, sentiment appeared to improve significantly. Will Tesla be able to pick up the pace to match Elon Musk's goals? Tesla produced 930,422 electric vehicles and delivered 936,222 in 2021, which is a new high for the brand, over 80% more year after year. Experts aren't overly concerned about Tesla's future numbers. Its sales are currently exceedingly solid and growing. Despite delivery delays of up to a year or more, many people are still interested in owning one of its electric cars. According to Inside EVs, Tesla sold over 2,335,000 cars in 2021, a stunning result for a company that was scarcely known a decade earlier. At this rate, Tesla may just meet the 20 million mark in 8 years. If it actually happens, we're talking about a massive increase in Tesla's stock price target, as a company's performance is often directly proportional to stock price targets or predictions. Musk is more focused on short-term goals, though. He anticipates having more than 4 million Tesla drivers in their garages. This amount is based on the company's existing production capacity, which currently surpasses 100,000 automobiles per month and 1.5 million per year. This amount is likely to fall short in the coming months because if we consider that both Giga Texas and Giga Berlin are expected to reach or even exceed the current production levels at Giga Shanghai, more than 600,000 units per year, we're talking about an annual production close to 2 million vehicles. So what do experts think of Musk's goals? And what are their 2030 target prices? By 2030, experts predict Tesla shares to be much higher than they are now. As the world transitions to electric vehicles, the corporation will be immensely profitable at the time. Analysts at Wallet Investor predict that the stock will trade above $2,500 in 2025. Cathie Wood, on the other hand, predicts the stock will be worth more than $3,000 by 2030, though skeptics would beg to differ on the matter. Morningstar's Seth Goldstein feels Tesla is expensive, even if his base case forecasts the business becomes a top 10 car maker in terms of worldwide annual vehicle sales. He also anticipates gross margins to increase in the long run as a result of the company's ability to lower manufacturing unit costs and the launch of its subscription software. However, we estimate that Tesla will only produce roughly 5.7 million vehicles by 2030, far short of management's aim of 20 million, he added. The company also had an underweight recommendation from JP Morgan analyst Ryan Brinkman with a price objective of $250 by December 2022. He said in a recent note that the grade took into account advantages such as a very unique business model, an appealing product selection, and cutting-edge technology. He described the company's product as bold, unusual, exquisite, and immensely exciting to drive. The organization is driven by visionary leadership and supported by a functionally strong management team, Brinkman continued. Valuation appears to be pricing in upside associated with development into mass market areas well beyond our volume expectations for the Model 3 and Model Y. Danny Hewson, a financial analyst at AJ Bell, is also pessimistic about the company's long-term stock price potential. She told Capital.com, "Only an eternal optimist expects Tesla's shares to continue to soar the way they have. The electric car producer will have a lot of opportunities in the next 5 years, but there will also be a lot of competition." Tesla has an advantage because it was first out of the gate, but Hewson warns that once the field widens and consumers have more options, Tesla will have to work much harder. Tesla investor Gary Black posted some intriguing math on where the electric vehicle brand might be very soon. He presented his case for Tesla's market capitalization to reach $4 trillion, a market capitalization that is currently valued at $1.09 trillion. According to Black, global electric car penetration will reach 60% by 2030. Tesla will have a 20% EV market share. Tesla will be delivering around 10 million vehicles per year by the end of the decade, with global light vehicle sales at 85 million units. Black estimates that those deliveries, coupled with service sales tied to Tesla's existing fleet, will bring in $140 billion, or nearly $100 per share for the firm. By the end of the decade, he expects nearly 1.4 billion Tesla shares will be outstanding, up from over 1 billion currently. He assigns a 30 price-to-earnings ratio on $100 per share earnings, resulting in a $3,000 price target. It appears straightforward, yet there are numerous ifs. It's difficult to predict EV penetration 8 or 9 years from now, but the auto industry seems to believe that by then, 40% or 50% of all new vehicles sold will be electric. The profitability and market share of Tesla are also debatable. The 30 PE multiple can do the same. Traditional automakers have low PE multiples and grow at a slower rate than the entire economy. Tesla, according to Black, will continue to grow at above market rates by 2030. It's an optimistic perspective, but it's also cautious. A $3,000 stock in 2030 will return around 17% a year on average for the next 8 years, whereas Tesla stock has returned about 42% a year on average over the last 8 years. The short-term price goal for Tesla shares is $1,600 according to Black. If he was publishing brokerage research, that would be the highest on Wall Street. With a $1,580 price target on Tesla stock, New Street Research analyst Pierre Farajau currently holds the title. There's also a lot of Tesla bears to think about. The bottom 3 price predictions are all around $215 per share. Tesla investors would profit around 10% a year on average between 2023 and 2030 if the company reached Black's price target in 6 to 12 months, as he was correct about everything else. It's up to bulls and bears to decide if that's a compelling enough return for Tesla stock. According to Deloitte researchers, our global EV forecast is for a compound annual growth rate of 29% attained over the next 10 years. Total electric vehicle sales are expected to rise from 2.5 million in 2020 to 11.2 million in 2025, and then to 31.1 million by 2030. Electric vehicles would account for around 32% of total new car sales. In this fast-growing market, Tesla already has an excellent position. The Model S, Model 3, Model X, and Model Y models are not only technologically advanced, but also visually beautiful, which is why there are so many more on the road. In the next few years, the corporation may potentially gain from any increase in fuel prices or government regulations on traditional internal combustion engine automobiles. What do you think Tesla's stock price target will be by 2030? Comment down below.